Let's talk about Diageo. So, companies can have little hiccups, go through sort of short-term issues. And I think lots of the market at the time thought, okay, maybe we'll give Diageo the benefit of the doubt. But then there was nagging concerns that people were drinking less. What does that, is that a structural headwind for Diageo as a business? What does it mean longer term? And then I don't know. It just seemed to be a succession of bad news after bad news. What do you do in this situation? Obviously, you've stayed patient. Other people would have just sold out and said, we think that actually the future is different for Diageo and we don't want to be in it.
Let's just say one thing. Okay, so in 2019, before COVID, this business had annual revenues of 17 billion. Today, it has revenues of 20 billion. I think last year its sales were down 200 million, okay, on a 20 billion revenue line. So I mean, you're right, the share price has more than halved, but actually the business is a significantly bigger business today than it was pre-COVID. And the difficulties that you're talking about, and I'm not denying them, but to date at least, all that's happened is that Diageo's revenues have gone sideways. Who knows what the revenues will be this year, but I think the median forecast is just a tad under 20 billion. So the share price has more than halved, and yet revenues, maybe at their worst, are going to be down 3 or 4%. I mean, I know earnings are going to be down more than that, but it's not like the business is imploding. I mean, it really isn't imploding. We were talking about Guinness beforehand. That's booming. Some of its brands are doing well. But again, listen, I fully acknowledge the risks of sounding complacent here. I absolutely get it. And in the end, who knows? But why haven't we sold Diageo? Well, because it's one of the very rare UK companies, and that's what I do. I have to pick UK companies. It's one of the very rare UK companies that is self-evidently the best in the world at what it does. It's the biggest, it has the best brands, it's the best diversified by product and by geography. It's an exceptional business, Diageo. And I think even more to the point, I mentioned investors focusing on the short term, and I'm not saying it's not important, but so few corporate assets, so few of them can you confidently predict will in 25 years' time, let's say I'm still running Finsbury in 25 years' time. Be a nice idea. I promise you in 25 years' time, Guinness, Johnny Walker, Tanqueray, Baileys, NSE, those brands will still be being enjoyed around the world, probably in higher volumes than today, assuming the world economy grows. And that's really, really rare. It just is. When you look back at financial and industrial history, most companies don't survive and prosper for really long stretches of time. So in theory, it ought to be very, very valuable indeed. But I agree, the thesis is being tested today.
What I thought was quite interesting is they've hired Dave Lewis, formerly of Tesco, but the share price has not rebounded. I mean, clearly he's got a very good track record of creating value for businesses. Why is it that the market's still very skeptical about a turnaround? Is it because they think that the scale of the job in hand is not simple to achieve?
The truth is that trading for Diageo clearly remains difficult. Right now, it's still difficult. We can see the statistics coming out of the US spirits market. That market is shrinking, maybe for cyclical reasons. Maybe there's some long-term effects here as well. And I can understand why investors are reluctant to start bidding up Diageo shares until at least that US market begins to stabilize. And who knows when that will be. There's also the recognition that, I agree, Sir Dave Lewis has a great track record and a great track record in businesses that have relevance for Diageo. But what's he going to do in his first 6 months? I mean, maybe that's when you take the maximum amount of pain, and maybe the smart money would be to buy when he announces the big cost cutting or the big hit to it. I mean, who knows? I don't know that, but I can understand people wanting to try and time the recovery. But I know that it's sort of boilerplate PR, but I just quote what Sir Dave Lewis said when he took this job on. He said, this is one of the world's great consumer companies with great brands and in the long term, great opportunities. And actually we've spoken to him and we know that he's sincere in that appreciation of the strength of the brands and the opportunities. At the moment, no one believes it.
Is he trying to still decide, is Diageo's problems of its own making, or is it simply the environment's changed and the company hasn't adapted or not been created enough with its marketing, for example?
He's interested that in the United States, which is where people are most concerned, he's interested that so-called Gen Z in the United States, that is the first generation in US history that is drinking more spirits than beer and wine. That hasn't happened before. And he certainly tabled that as a sign that maybe the backdrop isn't as catastrophic as the share price might be implying.
Well, let's talk about, I want to talk about Rightmove and Sage and about how they might be disrupted by AI. I think lots of people assume that companies like that might embrace AI to help themselves run more efficiently. But if at Rightmove, you're looking for a house, I don't know. I mean, is there a part of Rightmove that you would perhaps don't need in 5 years' time, or that AI could do for you? Sage as well. This is like sort of the old school accounting software stuff. It feels like that could be something that AI could do for you. Are you worried at all about sort of these threats, or do you see AI's opportunities for these companies?
Well, listen, we see it as an opportunity. That is a thesis that will be tested by the development of the businesses and the AI phenomenon in itself. And there is no certainty of their success, but there's not much certainty of success of any company in any industry, and you have to take a view. One of our concerns about the UK stock market is that companies haven't been aggressive enough in investing behind their growth opportunities. And I think both Rightmove and Sage have a very significant opportunity to grow their businesses and grow their businesses very, very profitably by multiple times their current revenue base, if they make the investments now that are necessary to capture the utility and efficiencies that AI can bring. Both those companies, as I'm sure you know, have explicit, public, and I think credible strategies to utilize digital technology, including AI, to increase their utility to their customers. It's only 12 months ago that Rightmove won an award as the Tech Company of the Year in the UK in recognition of the investment that Rightmove's been making in its digital and AI services. And you can see that the company's growth rate has accelerated as a result. Sage last year grew its earnings at 18%, with its revenues up 10%. And Sage grew at those rates because its cloud-based AI-enhanced services are selling very well. So new technologies do bring the risk of disruption, but new technologies for companies with high recurring revenues and strong market positions, it's an opportunity for them to enhance their growth rates. And yeah, very much hope that that's the case for both of those. Just on Rightmove, I think it's so interesting. Could people look for property listings on chat? Well, maybe. But in the United States, chat has already taken the decision to collaborate with Zillow, which is the biggest property portal business in the United States. Doesn't have the same share as Rightmove, by the way, but nonetheless, it's the biggest. So rather than go directly to compete with Zillow, ChatGPT has actually gone into partnership with Zillow. And that kind of makes sense to me. I mean, sure, you can do fun things with these agents, can't you? But you're always just slightly uncertain whether everything's there. And I think for business users, for professionals, for people considering the most important decision they make in their lives, which is choosing the right property, relying on ChatGPT when you know that Rightmove absolutely has all of the inventory and all of the ancillary services built around. It's a pretty deep moat. It's a pretty deep moat.
Were you surprised at the market reaction sort of, I don't know, maybe 2-3 months ago when Rightmove came out and said, here's our earnings, we're doing fine, we're going to spend this extra money? And the market reaction was incredibly negative. I wonder whether people are going...
I wasn't surprised. I didn't like it, and I wasn't surprised. But was it the right thing for the company to do? And when you settle down a bit and... Listen, I'm just going to quote the company's own investment advisor, the company's own broker. I mean, that kind of third party, okay, it's related to Rightmove, it's their advisor. I mean, they're talking, Rightmove has annual revenues today of around 400 million. There are forecasts, not for the next couple of years, but maybe on a 5 to 7 year view, that Rightmove could, if it gets this right, be more like a 1.5 to 2 billion per annum revenue business. That's the scale of the opportunity for the business that gets AI services right in the context of the UK residential real estate market. And at the very, very, very least, I think everyone would have to acknowledge that from this start point, with 85% of all the time spent by people looking at properties being spent on Rightmove, it's definitely theirs to lose. Do you know what I mean? I mean, no one's going to walk in and just take that mind share away from that company. In the meantime, with every single passing hour or day, there's 1.5 billion minutes a month spent on Rightmove's platform. That's providing data and insights for that company that's not available to anybody else. It's a strong franchise and it's getting stronger. So, yeah, UK investors, who am I to say? But sometimes investors get scared when companies point out that they've got a big growth opportunity, but it's going to cost a bit in the short term. I mean, to me, we've got to encourage them to make those investments and fundamentally change the scale of the business upwards.